All right, let's get into a wild one today. We're going to break down this bizarre story about how a huge political deal in Greenland caused a massive and, at first glance, totally nonsensical trading frenzy on Wall Street. It's a perfect look at the hidden and often irrational ways the market is wired. Okay, so let's dive right in. On the face of it, right, a political deal happening way up in the Arctic and a small machinery company based out of New Jersey. What could they possibly have in common? Well, as we're about to see, there's a hidden wire connecting global politics to the stock market, and it shows up in the most unexpected places. We're going to unravel this mystery.
So here's the puzzle we're trying to solve. A major geopolitical announcement drops all about Greenland. And almost instantly, the stock of this little company in New Jersey, Greenland Technologies, ticker GTEC, just goes vertical. I mean, it explodes. So what gives? What's the connection? And why this specific company?
Okay, so our first piece of the puzzle, it's a classic case of mistaken identity. It looks like a huge wave of money all chasing this Greenland headline, well, it grabbed the wrong guy. You know, this happens more than you'd think. It's a phenomenon called ticker confusion. The easiest way to think about it is like a Google search. A big news story breaks, and traders, both human and algorithmic, instantly start searching for a stock that's related. And just like with a search engine, they often just pile into the first, most obvious result, without really checking if it's the right one.
So, this table really lays out the options the market had. Now, the company with direct exposure, the one involved in mining in Greenland, was Greenland Resources, GRLRF. But here's the catch. It trades on the OTC market, which is kind of obscure and harder to buy. But then, you have GTech. It has Greenland right there in the name, and crucially, it trades on the NASDAQ. That makes it incredibly easy for anyone and everyone to jump in.
And this really gets to the heart of it, doesn't it? In those first few frantic minutes after a big news story, capital is lazy. It always follows the path of least resistance. So the money just flooded into GTech, not because it was the best choice, but simply because it was the easiest one to buy. Okay, but this is where the story gets really interesting. It's a total plot twist. Those traders who piled into the wrong stock just because of its name, they accidentally stumbled onto something absolutely incredible that was hiding in plain sight the whole time. Right, so that quote basically says it all. The initial mistake, the ticker confusion, that was just the match. But what nobody expected was that GTech, the wrong company, was actually a pile of dry tinder just waiting for a spark. The rally was sustained because people discovered the company was shockingly valuable on its own. First off, let's just look at their financials. The company had just pulled in over $15 million in net income. And get this, that's coming off a $25 million loss the year before. I mean, that is a massive, massive turnaround. This business was suddenly making serious money. And all that income boiled down to earnings per share of $1.03. Now, for Wall Street analysts, that wasn't just a beat, that was an absolute home run. It completely blew all the estimates out of the water. This wasn't some flimsy story stock, it was a real earnings machine.
And this is the number that just makes your jaw drop. When this whole thing started, the stock was trading at a price-to-earnings ratio of just 1.2. 1.2. To put that into perspective, you were basically buying the entire company for just a little more than a single year of its profits. That is just absurdly, unbelievably cheap.
And if you're still not convinced how cheap that is, look at this chart. The rest of its industry, its peers, they're trading at an average of 18 times earnings. GTech was at 1.2. It wasn't just a discount, it was practically a giveaway. This created a huge margin of safety, a powerful safety net for anyone buying in. So now you've got these two totally separate forces colliding. On one hand, you have this crazy meme rally pushing the stock up, and on the other, you have this rock-solid, super cheap valuation preventing it from falling. So what happens when you smash those two things together? You get a perfect storm. And that storm creates something that professional traders absolutely live for, an asymmetric bet. It's that holy grail scenario. Heads I win, tails I don't lose much. The potential upside from the news was explosive, but the downside risk was cushioned by the company's incredible profitability. So the whole thesis here is beautifully simple, right? It's got two parts. Part one is the meme premium. The Greenland news provides that lottery ticket upside. If the story gets even bigger, the stock could just go to the moon. But then there's part two, the value floor. The company is so profitable and so cheap that it acts like a safety net, supporting the price even if all the hype fades away.
And just when you think it can't get any crazier, this is where it all just clicks. It turns out the market accidentally got it right. This Greenland deal, it's really an infrastructure deal. It means building ports, roads, bases in a really harsh environment. And what do you need for that? Heavy machinery. Well, guess what G-Tech subsidiary Heavy makes? Exactly that, electric heavy industrial equipment. The market, by sheer accident, stumbled into the right company for the wrong reason. You just can't make this stuff up.
So after all that, what's the big lesson here? What does this whole wild ride really teach us about how markets actually work from day to day?
Well, for one, it shows that stories and keywords can move markets a lot faster than balance sheets can. Liquidity is king. The easiest stock to buy gets the first wave of money, period. But the biggest takeaway is that the market isn't some perfect logical machine. It's messy, it's driven by human emotion, and it makes mistakes. And those mistakes, they create huge opportunities.
And really, this whole thing is a blueprint. This is exactly what smart money is looking for. They're always hunting for these little glitches in the matrix, these temporary mispricings where the market's first reaction is just flat out wrong. They understand these dynamics and they're ready to jump on them.
Which, of course, leaves you with one big question, doesn't it? In a world that is just flooded with headlines, with algorithms trading in microseconds, what other hidden connections and mistaken identities are just waiting out there to be discovered? What's the next Greenland arbitrage?